Welcome. In this video, will ZBCN coin pump come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structural elements on the chart is a clearly defined support level that the price has touched multiple times, each time responding with an upward reaction. This support point stands out not only due to the price reactions in the past, but also because it aligns with investor psychology, making it a strong and reliable structure from a technical analysis perspective. The repeated bounces from this level highlight how important and strategic this area is for buyers. In the markets, such solid support levels often serve as the starting points for long-term upward trends. This particular support zone has been tested several times in the past, and on each occasion, buyers stepped in strongly to push the price upward. These types of levels are considered safe zones not only for short-term trades, but also for medium and long-term investors. Investors often view these robust support zones as potential buying opportunities, as entries from these areas tend to carry lower risk while also offering upside potential. The consistent upward movements from this support level indicate that there is substantial demand at this price point, and that market participants view it as a value area, where the price is perceived to be cheap. In technical analysis, support zones are not just static structures, but also dynamic areas that reflect the emotions, expectations, and decisions of market participants. In the current scenario, the strong support line that is formed at this level suggests a market consensus that this area is significant, and as the price approaches it, buying pressure increases. As long as the price stays above such zones, the positive outlook is maintained, and investors remain hopeful that the upward movement will continue. If the price approaches this support level again, the likelihood of experiencing a similar upward reaction as seen before is considered a strong technical scenario. These kinds of support areas often see increased volume, as a majority of investors tend to buy in these zones, which in turn accelerates the price recovery. In the current case, if buying volume increases again above this support, a new upward trend may emerge. This represents a significant structure that supports market optimism and outlines a potentially positive scenario. Moreover, support levels should not be seen only as points where the price reverses, but also as origins of previous upward movements. Therefore, the possibility of upward moves similar to those that began from this level in the past is a technically strong argument. If the price reaches this area again and finds support, it may not only result in a short-term bounce, but also mark the beginning of a broader upward wave. Such structures should be closely watched, especially by trend-following investors. Another important feature of support zones is that when the price reaches them, investors are often emotionally motivated. Due to similar past reversals, a positive perception is formed in the minds of investors regarding this level, which psychologically supports the market's upward movement. The importance of psychology in technical analysis cannot be underestimated, as price movements are often a reflection of investor behavior. In this context, the fact that this support level is strong, both technically and psychologically, increases the likelihood of a renewed upward move from here. Finally, reversals from support levels are often sharp and decisive, offering investors opportunities while also allowing for short-term profit-taking. But we can't base our analysis solely on support. Let's also take a look at the other metrics. Stay tuned. A striking and highly promising technical pattern stands out on the chart: the falling wedge formation. In technical analysis, this formation is generally considered a trend reversal signal, and is often known as a powerful model that triggers an upward move following a downtrend. When we look at the current price action, we can see that the price continues to move within this wedge structure and is approaching a decision point as the wedge narrows. These types of formations typically represent periods of consolidation in the market, and the breakouts that follow are usually directional and strong. While the falling wedge creates a structure that narrows downward from wide to tight, it can be observed that each new low is less aggressive than the previous one. This indicates that selling pressure is gradually weakening, and buyers are slowly stepping in. In other words, even as the price moves downward, the diminishing strength of the declines suggests that the balance of power in the market is starting to shift. At this stage, while buyers wait patiently, a much stronger move is expected once the buying pressure increases near the end of the formation and a breakout to the upside occurs. At this exact point, if the price manages to break above the upper line of this wedge pattern, it could signal not just a short-term rise, but the beginning of a new trend. The upper line of the formation serves as a very critical resistance level from a technical standpoint. Each time the price approaches this line, it may encounter selling pressure or profit-taking. However, each touch actually weakens this resistance. There's a well-known rule in technical analysis. The more a level is tested, the weaker it becomes. So the more often the price touches the upper line of the wedge and lingers around it, the higher the likelihood of a breakout. This forms a highly positive signal for investors, as breakouts are often followed by strong, volume-supported rallies. In addition, falling wedge formations are usually seen at the end of downtrends and are interpreted as signs of recovery. These patterns tend to emerge when the panic in the market starts to subside and participants begin to regain confidence. The very formation of this pattern is already a positive sign, indicating that selling pressure is easing, the strength of the downtrend is waning, and buyers are preparing to regain control. Especially if an increase in volume is observed as the price nears the upper boundary of the formation, it can be considered a technical confirmation of the breakout setup. For this reason, when investors evaluate these formations not just based on geometric shape, but also in conjunction with volume, they gain a much healthier perspective. A breakout to the upside from this falling wedge structure is not only a technical success, but also an important indicator that investor psychology has turned positive. Especially after such a breakout, previous resistance zones may become targets. As the price tests these levels, investors who entered positions within the wedge operate with both technical and psychological advantage, because the price moving outside of the formation indicates that the market has now defined a new direction and that buyers have gained the upper hand. This could open the door to a larger and more sustainable upward move. It should be remembered that these types of formations signal the market's attempt to recover following a period of exhaustion and imbalance. The direction the price takes as it exits this tight structure often has effects across broader timeframes. Therefore, it is a critical breakout point not only for short-term investors, but also for those following medium and long-term strategies. For this reason, the falling wedge currently being observed and the price movement within this structure are extremely significant. Also, once the formation is broken, technical target calculations can be made. In falling wedge formations, an upward move equal to the height of the wedge is typically expected. One of the most important technical elements to note on the chart is that the price is currently positioned very close to the 200-day exponential moving average. This suggests that the market is in search of an important technical balance at this point. The 200 EMA is an extremely valuable and frequently followed indicator in technical analysis to determine the direction of the long-term trend. The approach to this level could mark a turning point for traders, as the price has the potential to start an upward movement from this level. The fact that the price is currently hovering near this level can be considered as a kind of restructuring process. In particular, this moving average, which has served as support or resistance many times in the past, now stands out as a decisive factor in the direction of the price. There is a well-known fact in technical analysis: the more a level is tested, the more important it becomes. In this context, the fact that the price is approaching this important EMA level raises the possibility of a reaction from here. Such contacts are often accompanied by strong buying, setting the stage for the market to regain upward momentum. The 200 EMA indicates long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.